Hi, this is John Dumke with Long Beach Real Estate. How is the coronavirus going to affect real estate? Today is Wednesday, March 25th. To see what might happen in the real estate market, let's recap what's happened in the stock market. Our last good day in the stock market was Friday, February 21st. At that point, the Dow was a little over 29,000, and in the preceding 3 weeks, the Dow crumbled by over 30%, going down to about 1,900. For the last week, we've seen the market bounce off the bottom, yesterday with a 2,000-point gain, and today following through slightly with maybe 400-point gain. Going forward, there are 5 things that will affect real estate valuations. Number 1 is interest rates. Number 2 are buyers' incomes. Number 3 are current real estate valuations. Number 4 is other investment alternatives. And the 5th item is sort of the emotional aspect and the desire to own a home versus the fear of buying a home at uncertain times. We'll put those 5 items into context and figure out which has the greatest impact going forward. The reason I mentioned interest rates first is because I put that in context with what happened in the stock market correction. In the first week of the stock market correction, interest rates dropped precipitously, and at that time I produced a video that it would be a very, very smart thing to look at refinancing because rates were at an all-time low. In that first week, when the stock market corrected, it looked like the low interest rates might be a boost to the real estate market. 1 week later, it was clear that there was many negative consequences in addition, mainly businesses being shut down. And obviously lower interest rates alone would not offset businesses being shut down and the negative impact that that would have on buyers' incomes. Going forward, the big question will be, does this last more than a month or two? If that is the case, then buyers' incomes will suffer negatively over the course of the next 6 months or a year, and that will negatively impact a buyer's ability to qualify. Plus, it will negatively impact their emotional state where they feel that they need a stable income to commit to a 30-year mortgage. Now let's look at real estate valuations and why that's so important. If a marketplace is highly overvalued, it's simply more susceptible to a correction. In comparison, many people thought that the stock market was in a bubble, and the coronavirus was simply just the pin that pricked the bubble. And so the stock market has corrected because it was at all-time record valuations, both in price-to-earnings ratios and many, many companies coming public that weren't even making earnings. So there was a little bit of froth in that market, and when there is froth in a market, it's more likely to correct. Looking at the Southern California real estate market, however, single-family homes are relatively well priced. If you were to take the average home in East Long Beach, which is a 3-bedroom, 2-bath with around 1,600 square feet in either the 90808 or 90815 zip code, that average home would be selling for about $750,000. If you put 10% down on that home, your payment would be around $4,100, $4,200, depending upon the interest rate. If you were to compare that $4,100 or $4,200, it might be that home might rent for around $3,100. And if you took into consideration the tax advantages, you might find that that payment is pretty equivalent to the rental payment. As a quick metric, what I usually do is I multiply the house payment with 10% down times 0.75, and that should equate roughly to rent. In 1990, it got to 25% overvaluation. In 2006, at the last bubble, it was 40% overvalued. Right now, I have that metric at about fair valuation. Fair valuation says that there's not much risk in the market. Let's talk a little bit about other investment alternatives, because as the stock market is corrected by 20% or even 30%, you would think that maybe some funds would flow in that direction. Well, overall, as I mentioned, the stock market I think was significantly overpriced, and real estate isn't significantly overpriced. Most people's big concern is a search for yield. As baby boomers look to retire, they're looking to generate some type of income moving forward. Real estate in general is going to produce, if it's an income property, between around a 3 to a 4% return on the cash put down. Plus, you're going to add on top of that the appreciation. Now, the stock market, even though it's corrected by over 20%, is still probably not even producing that return on average with regards to dividends. So I don't see money flowing back into the stock market. In addition, I see the stock market kind of freaking people out a little bit now because it has been so inconsistent, and we have 3 years of no gains. So you might find some baby boomers overall starting to liquidate their portfolio as they move forward into retirement. The fifth aspect to determine whether real estate might take a hit or not is just to look at the soft aspects. And for that, I actually contacted my escrow officer and I asked her, how many escrows do you have in the office? She said on average they have about 200. Further, then I asked her, did you have anybody cancel? She said they had one cancellation out of 200 people, and she thought that that buyer might have canceled anyway. She did say there was two other people. One did have the coronavirus and couldn't come in to sign loan documents. The other person was unable to get verification of employment because her employer had shut down. So out of 200 transactions, we only saw one that possibly canceled. Overall, that means that buyers have not gotten cold feet and still want to proceed. If you are going to be self-quarantined, there's a nice aspect to knowing that you own your home and you don't have to go anywhere. So in summary, if we were to look at the 5 items that comprise whether the market would go up or down, we have one, which is interest rates. Overall, interest rates are very, very appealing, and that will provide a little bit of support to the marketplace. The second issue, which is going to be the biggest issue, is going to be buyers' incomes. If the coronavirus self-quarantining lasts for more than 2 months and we see buyers' incomes dip, we could see that provide a hit to the marketplace. The third issue is valuations, and real estate is not overvalued right now, so I don't see the market susceptible to a significant correction. The fourth item, which is other investment alternatives, well, the stock market is very volatile and still not producing great yields, and so real estate still looks attractive, relatively speaking. The fifth item is just the soft aspects to owning a home, the security that you have your own home versus the fear of buying a home, and right now I see that as pretty neutral. Overall, the biggest impact going forward is going to be buyers' incomes, and it's all contingent upon how long the self-quarantining lasts and how that might negatively affect a buyer's incomes. If we do see a significant group of buyers drop out of the marketplace and no longer be capable of buying because their income was hurt for this year, then we might see prices drop a little bit. Overall, at most, I can see properties drop 10%. But at that point, with low interest rates, they're going to head into undervalued territory, and very, very rarely does the marketplace become undervalued, and it only lasts there for a brief period of time. So I would anticipate that if it did have a slight drop, then within the year, we would bounce back pretty quickly. But again, I'd say 100%, this depends on the length of our self-quarantining and the negative impact that that might have with businesses. If this extends beyond 2 months, it's going to be an issue. If it extends beyond 6 months, we're going to have a problem. So that's going to be the question, is how quickly can people get back to work, or how negatively impacted are the people's employment? If you have any questions about your own home, we invite your calls. We offer free, no obligation consultation regarding your situation. My name's John Dumke with Long Beach Real Estate. My number is 562-572-2296. Thank you very much. Look forward to speaking to you in the future.